The oil war between the United States and Russia has just escalated to unprecedented levels, shaking the very foundation of global energy markets. In a bold and unexpected move, President Donald Trump has struck a devastating financial blow against the Kremlin, imposing massive tariffs on Russian oil. The consequences: a staggering $149 billion revenue cut that has sent Vladimir Putin into an uncontrollable meltdown within the walls of the Kremlin. The global energy market is now in absolute chaos. Oil prices are skyrocketing, investors are scrambling, and major economies are bracing for what could be one of the most disruptive energy crises in modern history. But this is more than just an economic dispute. It's a high-stakes geopolitical battle with global implications. Russia, once a dominant force in the oil industry, is now struggling to keep its grip on power. Will this economic pressure be the final nail in the coffin for Russia's oil supremacy? And what does it mean for the rest of the world, especially for nations heavily dependent on Russian energy exports? As tensions rise, all eyes are on the Kremlin. How will Putin respond to this financial disaster? Will Russia retaliate with aggressive countermeasures, or is this the beginning of a slow and painful decline for one of the world's largest oil exporters? Stay with us as we break down the full impact of this oil war and its potential consequences on global stability. Before we dive in, make sure to subscribe to the African Web for more in-depth geopolitical analysis on how global events shape Africa and beyond. Donald Trump's tariffs. On April 2nd, President Trump made a bombshell announcement, declaring a set of punitive tariffs on Russian oil imports. This decision, aimed at crippling Moscow's ability to fund its geopolitical ambitions, immediately sent shockwaves through financial markets. Within hours, the Moscow Stock Exchange lost an estimated $23.7 billion, with Russian energy giants like Rosneft and Gazprom experiencing catastrophic declines in their stock prices. The tariffs have not only affected Russia's ability to sell oil to the United States, but have also created ripple effects in global energy markets. Several European nations that depend on Russian crude are now reconsidering their import policies, fearing secondary sanctions from Washington. Additionally, major multinational corporations that had long-standing partnerships with Russian oil firms are now forced to reconsider their investments. This has led to uncertainty in an already volatile energy sector, causing prices to surge as traders anticipate supply disruptions. For the Russian economy, this move is nothing short of devastating. Oil revenue is the backbone of the country's economy, and the sudden restrictions imposed by the US threaten to widen Moscow's budget deficit. The Kremlin's response has been one of defiance, with officials vowing to find alternative buyers in Asia and the Middle East. However, many of these nations, including China and India, are wary of openly defying US sanctions, potentially leaving Russia with fewer options than it anticipated. The question now is, how long can Putin's economy survive under such brutal conditions? Sanctions against Russia. The United States, alongside its European allies, has already placed stringent sanctions on Russia due to its military actions and aggressive foreign policies. However, the latest round of measures has escalated economic warfare between Washington and Moscow to unprecedented levels. The cumulative effect of these sanctions is proving to be catastrophic for Russia's financial stability. Russian oil exports, which once contributed to a robust national budget, have taken a major hit. With major global buyers distancing themselves from Moscow, Russia's ability to sustain its economy is rapidly diminishing. Banks have faced significant challenges in processing transactions linked to oil sales, as Western financial institutions tighten their grip on Russian assets. The country's central bank has been forced to intervene repeatedly to stabilize the ruble, but inflation continues to climb, raising concerns about long-term economic viability. Additionally, many Russian oligarchs, who play a crucial role in sustaining the country's economy, are finding themselves increasingly isolated. The loss of access to Western banking systems and the freezing of assets abroad has made it harder for them to support the government financially. This has led to growing dissatisfaction among the country's elite, with some speculating that internal political rifts could emerge as economic hardships intensify. Ukraine's attacks on Russian energy infrastructure. As if economic pressure from the US wasn't enough, Russia is also facing direct attacks on its oil and gas infrastructure from Ukrainian forces. Over the past several months, Ukraine has intensified its drone strikes on critical Russian energy facilities, causing severe destructions in production and exports. Refineries in major oil-producing regions have been hit, leading to shutdowns and significant repair costs. These strikes have targeted key supply chains, disrupting the transportation of crude oil to export terminals. The destruction of storage tanks has also led to major losses, further compounding the financial strain on Moscow. Ukraine's ability to strategically cripple Russia's energy network demonstrates that the war is no longer just being fought on the battlefield. It has extended into the economic realm as well. As a result, Russia is now struggling to maintain a steady supply of fuel for both domestic consumption and military operations. The rising cost of repairs, combined with declining revenue from exports, is putting enormous pressure on the Kremlin to find solutions. Some reports suggest that Russia is redirecting funds from its military budget to fix damaged infrastructure, which could impact its ability to sustain prolonged military campaigns. Russia's economic crisis. The impact of these sanctions, tariffs, and attacks has thrown Russia into one of the worst economic crises it has faced in decades. The once mighty sovereign wealth fund, which was built as a safety net for times of crisis, is rapidly depleting. Analysts estimate that if the current rate of spending continues, Moscow could run out of emergency reserves within the next year. Inflation is soaring, making everyday life increasingly difficult for Russian citizens. Prices for basic goods and services have skyrocketed, and the Russian ruble continues to weaken against the US dollar and the euro. The banking sector is also under severe strain, with reports of liquidity shortages and an increasing number of failing financial institutions. With a lack of foreign investment and businesses fleeing the Russian market, the country's future looks increasingly uncertain. Even more concerning is the long-term impact on Russia's military capabilities. With declining revenues and rising costs, the government may be forced to scale back its defense expenditures, potentially weakening its ability to project power abroad. This could have significant geopolitical implications, particularly in regions where Russia has long sought to maintain influence. If Putin can't finance his war efforts, will he be forced to scale back his operations? Or will he take even more desperate measures to maintain his grip on power? Conclusion: Russia's economic situation is reaching a breaking point, with a $149 billion loss in oil revenue, sanctions tightening their grip, and Ukraine targeting its energy sector. Putin's hold on power has never looked more fragile. The question now is, how much longer can Russia endure before it faces a full-scale economic collapse? What do you think? Is Russia's downfall inevitable, or does Putin still have a trick up his sleeve? Let us know your thoughts in the comments below. And don't forget to subscribe to the African Web for more explosive geopolitical insights.